Crypto Pirates Daily News. February 13, 2022. News headlines. Netflix has ordered a cryptocurrency series after $4.5 billion in Bitcoin was stolen from Bitfinex. If these conditions are met, Uber's CEO says the company may accept cryptocurrency in the future. Cryptocurrency has a measurable effect on economies. The CryptoPunk number 5822 NFT was sold for a record-setting $23.7 million. Bitcoin's price is increasing once again. Is this a good time to invest? Cryptocurrency prices, digital assets are suffering due to rising US inflation. Argentina's tax authority seizes digital wallets in attempt to collect tax debts. Despite environmental concerns, Intel attempts to profit from cryptocurrency mining. With $263 million in cryptocurrency sales, Russia halts 4 dark websites. The Samsung Galaxy S22 includes a cryptocurrency wallet. Netflix has ordered a cryptocurrency series after $4.5 billion in Bitcoin was stolen from Bitfinex. Netflix has ordered a documentary series about a couple accused of laundering billions of dollars from the Bitfinex hack in 2016. Heather Morgan, an aspiring rapper, and her husband, Ilya Dutch Lichtenstein, were arrested this week in New York. In addition, the DOJ seized 94,636 bitcoins stolen in the Bitfinex hack. Coming soon to Netflix, a documentary series about the Bitfinex hack and the couple involved. Netflix, an American subscription streaming service and production company, announced on Friday that it has ordered a documentary series about a married couple's alleged scheme to launder billions of dollars in stolen cryptocurrency in the largest criminal financial crime case in history. The Bitfinex documentary series will be directed and executive produced by Chris Smith, who is best known for his work on Fire, The Greatest Party That Never Happened and Tiger King. Furthermore, Nick Bilton, best known for his work on Fake Famous, The Inventor, Out for Blood in Silicon Valley, and American Kingpin, The Epic Hunt for the Criminal Mastermind Behind the Silk Road, is set to executive produce the Bitfinex documentary series. The documentary will tell the story of a couple who allegedly laundered more than $4 billion in Bitcoin from the 2016 hack of cryptocurrency exchange Bitfinex. According to Netflix, Ilya Dutch Lichtenstein and Heather Morgan were arrested on Tuesday, February 8, in their New York City apartment, and now face charges of conspiring to launder nearly 120,000 Bitcoin related to a 2016 hack of a virtual currency exchange. While Lichtenstein, who has dual US and Russian citizenship, co-founded MixRank, a Y Combinator-backed startup, Morgan is an aspiring rapper who goes by the stage name Razzle Khan. The 31-year-old rapper and former Forbes contributor referred to herself as a irreverent comedic rapper and a crocodile of Wall Street. Following her arrest, videos of her rapping went viral on social media. The U.S. Department of Justice, DOJ, announced Tuesday that Lichtenstein, 34, and his wife, Morgan, 31, were arrested for alleged conspiracy to launder $4.5 billion in stolen cryptocurrency from the Bitfinex hack in 2016. According to court documents, they allegedly conspired to launder the proceeds of 119,754 Bitcoin stolen from the cryptocurrency exchange. The DOJ also seized 94,636 BTC from them, which the department described at the time as the largest cryptocurrency seizure to date. valued at more than $3.6 billion. At the time of press, the seized Bitcoin was worth more than $4 billion. The court documents go on to describe the couple's numerous sophisticated laundering techniques, which included using fictitious identities to open online accounts, using computer programs to automate transactions, depositing stolen funds into accounts at various cryptocurrency exchanges and darknet markets, and leveraging anonymity-enhanced virtual currency, AEC, in a practice known as chain hopping. If these conditions are met, Uber's CEO says the company may accept cryptocurrency in the future. The CEO of the world's largest ride-hailing company says cryptocurrencies will most likely be accepted as payment in the future. In a new Bloomberg interview, Uber CEO Dara Khosrowshahi tells host Emily Chang that two major factors are preventing him from approving digital assets to cover the cost of fares and food delivery. It is entirely possible that this will occur. We're constantly conversing. I believe that right now, what we see with Bitcoin and some of the other cryptos is that they are quite valuable as a store of value, but the exchange mechanism is expensive. It's not good for the environment. Khosrowshahi also claims that cheaper and greener cryptocurrency transactions may prompt Uber to reconsider using digital assets for payment. As the exchange mechanism becomes less expensive and more environmentally friendly, I believe you will see Uber lean into crypto a little bit more. We're keeping a close eye on it. Is Uber planning to accept cryptocurrency in the future? Without a doubt, at some point. Exactly 1 year ago, Khosrowshahi stated that he had no plans to follow in the footsteps of other companies such as Tesla, which converted some of their cash holdings into Bitcoin, BTC. He did leave open the possibility of accepting cryptocurrency as payment for Uber and Uber Eats. From 2005 to 2017, Khosrowshahi was the CEO of travel booking website Expedia. Expedia became one of the first businesses to accept Bitcoin in 2014, after partnering with Coinbase to handle payment processing. Cryptocurrency has a measurable effect on economies. That is why some are fearful of it, while others embrace it. 1 month into 2022, the cryptocurrency debate is already raging, with proposals for regulation creating a schism between countries that are crypto-friendly and those that are not. Which party will determine the market's future? Dmitry Chernyshenko, Russia's deputy prime minister, reportedly signed a roadmap for regulating cryptocurrency businesses in the country. The development follows the publication of a consultation paper by Russia's central bank proposing a blanket ban on crypto-related activity in the nation. According to the research, titled Cryptocurrencies, Trends, Dangers and Regulation, aggressive adoption of cryptocurrencies poses major risks to the Russian financial industry. It asserts that non-state-based currencies endanger citizens' well-being by causing investment losses due to market instability, scams, and cyber assaults. Jurisdictions have wrestled with the notion that decentralized digital currencies offer an alternative to sovereign money, and hence undermine central banks' ability to conduct monetary policy. Although Russia has refrained from entirely suffocating activities within its borders, the recent events reflect a broader trend of states grappling with cryptocurrency adoption. Destiny prohibitions or laws will influence the industry's future. Cryptocurrency prohibition or pro-cryptocurrency? China has repeatedly prohibited Bitcoin trading. Last year's outright ban on crypto mining was a big blow to the sector, given the majority of crypto mining occurred in China. Mining is a process that involves the execution of software on computer servers in order to solve cryptographic algorithms. This procedure verifies transactions and creates a shared record of them for the whole blockchain network. Participants, referred to as miners, are automatically paid in cryptocurrency. Mining is a global sector, and significant capital investment is required to establish mining warehouses. The Chinese mining embargo compelled miners to sell or export their equipment abroad and invest in more hospitable jurisdictions, most notably the United States. As a result of diversifying mining operations, one of the consequences was the strengthening of the network. As a result, future prohibitions may have a smaller impact on the market. At the moment, the majority of Bitcoin mining takes place in the United States, Kazakhstan, Russia, Canada, Malaysia, and Iran. Certain networks confront significant obstacles. For example, in Kazakhstan, power has reportedly been rationed away from miners in order to conserve energy during periods of energy scarcity, prompting miners to flee the nation. According to reports, Kazakhstan's economy will suffer a cost of $1.5 billion or 2.14 billion Australian dollars over the next 5 years, including $300 million in lost tax revenue. Cryptography is not completely anonymous. Since the initial introduction of Bitcoin in 2009, cryptocurrency has gone a long way. There are currently thousands of cryptocurrencies, with a combined market capitalization of over $1.66 trillion, almost 2.36 trillion Australian dollars. It is frequently argued, particularly in a recent report by Russia's central bank, that the anonymity provided by cryptocurrencies facilitates unlawful activities such as money laundering, terrorism financing, and drug trafficking. This statement is not totally accurate. Indeed, the history of transactions on public blockchains such as Bitcoin and Ethereum, the two largest in terms of market capitalization, are public. Numerous governments, including Australia's and the United States, partner with huge private blockchain analytics corporations to monitor citizens' crypto wallet addresses and transactions. They do so in order to mitigate money laundering and tax evasion threats. Contrary to popular opinion, the majority of cryptocurrencies are pseudonymous. If a person's identity is associated with their wallet address via a central point of contact, such as a cryptocurrency exchange or an email, the wallet address can be traced back to the individual. According to research conducted by the RAND Corporation on behalf of Zcash, there is no widespread criminal use of privacy coins that protect users' anonymity. Future directions will be determined by policy. Cryptocurrency is gaining traction as a financial asset class, technological infrastructure, and social experiment in decentralized infrastructure. As a result, crypto communities are gaining clout in public policy debates. For instance, cryptocurrency proponents were able to stall a significant federal government infrastructure plan in the United States last year. Nonetheless, jurisdictions pursue distinct paths in terms of policy and legislation. China and Russia, for example, perceive it as a fiscal and ideological threat to national currencies. Others see it as a chance for economic growth, innovation, and investment. As new ways emerge, 2022 may be a watershed year for both the cryptocurrency business and those vying to ban or embrace it. Historically, countries that embrace crypto networks have reaped economic benefits in the form of innovation, investment, jobs, and taxation. The business benefits of embracing cryptocurrency as a digital asset include increased access to new demographics and more technological efficiency in treasury administration. At the same time, the industry's response to policy and regulation reveals that cryptocurrency is not a wholly decentralized entity existing just on the blockchain. Australia's stance. Australia has emerged as a prospective destination of crypto-friendliness in the fight to limit yet gain from cryptocurrencies. A Senate Select Committee on Australia as a Technology and Financial Centre report issued in October takes a favourable view on cryptocurrencies. It proposes market regulation of cryptocurrency exchanges, simplified taxation, and a regulatory framework for decentralised autonomous organisations, or DAOs. These operate on the same self-governing principle as decentralised cryptocurrency networks, managing participation and enforcing regulations through the use of blockchain technology and cryptocurrency tokens. Australia's choice is to seize the immense economic opportunity presented by decentralised digital assets. It remains to be seen how this will affect the national economy. However, if history is a lesson to be learned, we can anticipate policies influencing outcomes. The CryptoPunk number 5822 NFT was sold for a record-setting $23.7 million. The world of NFTs has been upended. As I publish this story, the largest CryptoPunk buy in history has just completed. CryptoPunks are one of the most precious NFT collections available, and one was recently sold for a record-breaking 8,000 ETH, which equates to more than $23,700,000 at the time of this press. Who purchased CryptoPunk issue 5822? CryptoPunks is a collection of 10,000 one-of-a-kind digital art characters, each one unique. The buyer of CryptoPunk number 5822 is the CEO of Chain, also known on the blockchain as Deepak.eth. The CryptoPunks bots on Twitter reported the record-breaking NFT purchase. The CryptoPunks bot is being built by the same business that created CryptoPunks. It will publicize all CryptoPunk sales and significant bids on the Ethereum blockchain. Deepak.eth also announced the news on his own Twitter account. Prior to paying a record price for the CryptoPunk NFT, the Chain CEO also did a 3, 2, 1 countdown on his Twitter handle. And the rest is history. That is the course of history. Sale of a historic NFT. The previous record for a valid CryptoPunk sale was $11.7 million, however that record has been shattered by a significant amount. Since around a year ago, CryptoPunks have been the center of attention. CryptoPunks, like the BAYC NFT collection, are owned by a slew of celebrities. Bitcoin's price is increasing once again. Is this a good time to invest? Will it rise and begin its day, or will it yawn and return to sleep for a few more years? Since early November 2021, when it reached an all-time high of $69,000, Bitcoin's price has been declining. Since then, it has fallen as low as $33,503 on January 24th. However, the price has continued to rise since then. Today, on the 8th of February, it is priced at $44,155. So, will Bitcoin's price continue to stabilize or increase? Is Bitcoin about to plummet even further, to say, $10,000 per Bitcoin, as one prominent investor predicted last year? Or is this all in good fun in an infamously unpredictable market? To begin, let us consider why it may have declined. To begin, It should be noted that crypto has a natural cycle in which investors tend to sell shortly after assets reach record highs, which Bitcoin did in November. Even before this new decline began to take hold, the market displayed warning flags in hindsight. Forbes reported on December 3, 2021, that Bitcoin and other cryptocurrency prices had plummeted, wiping off over $300 billion from the total crypto market in just 2 days. Bitcoin had recently reached a high of $69,000. As a result, it lost around 30% of its worth at that point, and about half of its value over the next few weeks, until January 11th. Following Bitcoin's decline, other popular tokens experienced significant declines, including Ethereum, Binance's BNB, Solana, Cardano, and Ripple's XRP. However, why did Bitcoin's value plummet? The December 2021 Bitcoin price collapse coincided with some significant stock market dips, as well as a warning from prominent investor Louis Novelia that Federal Reserve tapering could burst the Bitcoin and crypto bubble. The Fed is tapering, which should result in a correction in risk assets, including Bitcoin, Novelia stated in a December essay published by Business Insider. The more tapering the Fed does, the more volatility we should see in stocks and bonds, and, yes, Bitcoin as well. Following a sharp rise in inflation and a strengthening labor market, the Fed is now beginning to taper its monetary policy. While some believe that there is still enough of money flowing around, even as the Fed begins to taper, and doubt that the Fed will ever allow markets to fall too far, others are more pessimistic. Novelia, for example, claimed that Bitcoin may collapse to $10,000 per coin, a shocking 80% drop from its all-time high of nearly $70,000 set last month. Bitcoin hasn't been that low since September 2020. I would consider a decline below $46,000, the 200-day moving average, as a yellow flag, and a decline below the spring low of $28,500 as a completed massive double top, implying a decline to below $10,000, which coincidentally would match many of the stock's multiple 80% plus declines throughout its illustrious history, Novelia wrote, according to Business Insider. According to Forbes, the Bitcoin price has experienced similar drops in the past, while bullish Bitcoin and cryptocurrency investors remain hopeful that the price of Bitcoin will skyrocket in the next years. According to Business Insider, while Novelia's projection is dramatic, Bitcoin has previously experienced several 80% declines, the most recent of which began in December 2017 and lasted the most of 2018. Numerous factors contributed to this, including the government's rejection to approve the trading of a Bitcoin ETF, concerns about hacking, and warnings from notable investors such as Warren Buffett. According to The Sun, Bitcoin's quick decline in price occurred as a result of China intensifying its crackdown on Bitcoin mining, which contributed to the last crash earlier this year. The Omicron variant has also contributed to risk aversion because to concerns about the implications for the global economic outlook in the coming months, The Sun stated. Bitcoin's crash also comes only a few weeks after Twitter's CFO Ned Segal stated that he was not in favor of investing the company's capital in crypto at the moment. Segal stated in an interview with the Wall Street Journal in November that we would have to adjust our investment philosophy and choose to acquire more volatile assets, noting that Twitter prefers to maintain less volatile assets, such as securities, on its balance sheet. Additionally, the Wall Street Journal said that Twitter is forming a team dubbed Twitter Crypto to investigate methods to assist producers on the platform in earning money or accepting cryptocurrencies such as Bitcoin as payment, as well as other ways to leverage blockchain technology. Additionally, the Wall Street Journal listed a number of other technology businesses that have revealed their ownership of crypto assets, including Tesla and Square. On that note, while there is still a long way to go before taming this Wild West, certain aspects of the crypto world have recently achieved some legitimacy milestones, leading many to become frustrated with the hype surrounding shitcoins, giving the industry a bad name and calling for increased regulation to propel the space forwards. With this in mind, if you feel Bitcoin will recover and are a long-term believer, now may be an excellent moment to invest, so long as you are prepared for volatility and worst-case scenarios and can afford to lose everything you put in. However, if you are a short-term investor, you are venturing into the unknown with not even a semblance of a compass, i.e. gambling. This is because there is no way to predict whether Bitcoin would continue to plummet or rebound in the following days and weeks. Some were particularly bullish in January, at one of the brief periods when Bitcoin appeared to be reviving, before, ironically, it fell even lower again. One of them, Hong Fang, the CEO of a cryptocurrency exchange, recently told CNBC that, despite the uncertainties surrounding Bitcoin at the moment, I continue to feel that the $100,000 price range is reasonable. Even among crypto believers, there is considerable disagreement regarding the likely winners of the future. Certain individuals believe Bitcoin and Ethereum will always remain the gold standard and stores of wealth, Bitcoin more so than Ethereum, even if newer tokens outperform them in certain aspects, like speed and environmental bona fides. Meanwhile, others are looking further afield for less proven disruptors such as Nano, Solana, and Cardano. Cryptocurrency prices, digital assets are suffering due to rising US inflation. Economists had forecast a 7.3% increase in January prices, but these predictions were shattered when the report was revealed on Thursday. This news comes as the United States January inflation data revealed a 7.5% increase in prices, the fastest increase since February 1982. The present tightening of monetary policy may have a further influence on a number of speculative markets, including equities and cryptocurrencies. The Federal Reserve in the United States is likely to raise interest rates next month, which might result in a gradual decline in inflation levels. Bitcoin recently beat the bulk of other cryptocurrencies in terms of price. However, it is natural for investors to place a great emphasis on Bitcoin during bear markets due to its reduced risk profile compared to altcoins. Taking a deeper look at the numbers, BTC declined by 1.25%, ETH decreased by 4%, and SOL decreased by 6%. Stocks also fell sharply on Thursday, with the S&P down as much as 2% in the last 24 hours. Meanwhile, Treasury yields surpassed 2%. Despite the present environment, Fundstrat has maintained its strong support for crypto and recommended clients to continue buying despite volatile market movement and macroeconomic uncertainty. There is additional upward potential for government bond yields over the next year, although a pause is likely imminent, MRB noted. MRB Partners, an investment strategy business, stated this week that stocks and bonds will continue to struggle in the coming year as a result of the global monetary policy shift. Argentina's tax authority seizes digital wallets in attempt to collect tax debts. The Argentine Tax Authority, AFIP, has indicated that they would be entitled to take any assets held by taxpayers in digital wallets if tax arrears are not paid. The organization approved the law last year but delayed implementation until early 2022, during the COVID-19 pandemic. The organization now has a policy in place for seizing digital assets contained in these accounts. This update will enable authorities access to not only bank accounts and loans made by third parties, but also to the homes and vehicles owned by individuals who may have been involved in cryptocurrency transactions decades ago, according to official sources cited by local media. The agency's decision to include digital accounts on the list of assets seized to collect debts is explained by the rise of electronic payment methods and their widespread use. When compelled by law, financial organizations must divulge client information. Argentina's tax authority has declared that it will seize the digital accounts of 9,800 taxpayers. Cryptocurrency-based tax collection. Argentina's tax authorities are pursuing digital wallets such as Bimo and Walla that handle the country's fiat money. The primary target of these tax agents is Mercado Pago, an e-commerce platform with Bitcoin-friendly policies that allow debtors to store their savings safely away from annoying collectors seeking a portion of their earnings. When a person or business owes taxes, the organization will target more than just their digital wallet. Initially, the organization seeks out more liquid assets such as cash. It only turns to other assets such as Bitcoin investments when these funds become unavailable. Argentina's government has a strict stance on cryptocurrency. Sebastián Domínguez of STC Tax Advisors acknowledged in a recent interview with local media that they can seize even Bitcoins if the custody of these assets is held by an organization based in Argentina. He clarified, "While the novelty indicates that digital wallets are being targeted in the procedure as a result of their rise, this does not mean that the remaining assets are not subject to possible embargoes." How does the AFIP program work? The AFIP is Argentina's federal tax authority, and it has the exclusive authority to audit any return filed by a taxpayer throughout its allotted time period. The AFIP is in charge of ensuring the accuracy of an individual's tax returns. As a result, they may audit the individual at any moment and in a variety of ways. The government collects taxes in a variety of ways. To begin, they may run your revenue via a database. If there is sufficient evidence that you are concealing something, all bets are off in terms of return visits. Random sampling is the second technique. Finally, an inspector may pay a visit just for the heck of it or conduct the inspection using computerized screenings. Argentina's tax authority has the authority to issue information requests to any sector of the economy and anticipate a response within 15 days of notification. Despite environmental concerns, Intel attempts to profit from cryptocurrency mining. Although the chipmaker emphasizes improved efficiency, don't expect digital currency mining to become more environmentally friendly overnight. Intel announced Friday that it will begin selling a chip designed specifically to mine Bitcoin and other cryptocurrencies later this year. Block, formerly Square, and two mining companies, Argo Blockchain and Grid Infrastructure, are among the first customers. It's a big bet for the company on a technology that has the potential to change finance and, through a cryptocurrency-related concept called NFTs, change how we own digital assets. Cryptocurrencies and NFTs are plagued by issues of fraud and theft, but Intel hopes to address another major drawback: their extremely high energy consumption. Mining for cryptocurrencies is a computationally demanding process that records transactions on a widely shared database known as the blockchain. The first miner to solve a complex computing problem receives newly minted cryptocurrency. As a result, there is a strong incentive to have the most powerful machines, as well as the most efficient, because electrical power costs are high. Nvidia, one of Intel's main competitors, has made a lot of money from cryptocurrency mining. Indeed, the demand for graphics processing units, GPUs, by miners has made it difficult for gamers to find graphics cards. However, major suppliers of cryptocurrency mining hardware, such as Gold Shell, MicroBT, and Bitmain use processors known as application-specific integrated circuits, ASICs, that are specifically designed for mining. According to Cambridge University's Bitcoin Electricity Consumption Index, cryptocurrency mining consumes massive amounts of power, with a current estimated rate of 125 terawatt-hours per year. According to the Energy Information Administration, that is equivalent to Norway's 2020 electricity consumption of 5.5 million people, EIA. That doesn't even take into account mining other cryptocurrencies such as Ether and Dogecoin. Intel hopes that its chip will aid in the reduction of energy consumption. We are mindful that some blockchains require an enormous amount of computing power, which unfortunately translates to an enormous amount of energy, said Raja Kaduri, Senior Vice President and General Manager of Intel's Accelerated Computing Systems and Graphics Group, in a blog post. Because our customers want scalable and sustainable solutions, we're focusing our efforts on realizing the full potential of blockchain by developing the most energy-efficient computing technologies at scale. An increase in efficiency may assist miners in cutting costs and reducing power consumption, which worsens global climate crisis problems and deprives others of affordable power. However, don't expect a dramatic improvement in mining's environmental impact. Because cryptocurrency uses a proof-of-work approach, the difficulty of the computing problem miners must solve grows as more computing horsepower arrives to solve it. In contrast, advances in power and efficiency allow computers to deliver better video game graphics, tackle new challenges such as artificial intelligence, and expand into new markets such as smartwatches. And, by definition, ASICs are designed for a specific purpose, which in the case of cryptocurrency miners means they're obsolete once new models replace them. According to Digiconomist's Bitcoin e-waste monitor, Bitcoin mining currently generates 31,000 tons of electronic waste per year. With $263 million in cryptocurrency sales, Russia holds 4 dark websites. The 4 illegal platforms shut down by the authorities are Forum Shop, Trump's Dumps, Sky Fraud Forum, and UAS Store. According to reports, the Russian Ministry of Internal Affairs has shut down 4 major illegal dark websites that have generated over $260 million in cryptocurrency proceeds from the sale of stolen credit cards. Forum Shop, Trump's Dumps, Sky Fraud Forum, and UAS Store are the platforms in question. Seizures in the news. These illegal platforms, known as carding websites, sell stolen credit cards, which buyers can pay for with premium gift cards, luxury items, or, in this case, cryptocurrencies. Elliptic, a blockchain analysis provider, revealed that the 4 Russian websites generated approximately $263 million in digital assets as a result of their illegal transactions. Bitcoin, BTC, Ether, ETH, and Litecoin were the 3 most popular cryptocurrencies. Since October 2013, Forum Shop has accounted for $256 million in BTC from stolen credit cards, according to the analysis. This accounts for about 17% of the illegal market. However, because Forum Shop has used a sporadic use of payment processor over the years, providing precise figures is difficult, according to Elliptic. Since 2017, Trump's Dumps, which famously used former President Donald Trump's image for branding, has earned approximately $4.1 million. The platform specialized in selling raw magnetic strip data from tampered cards, also known as dumps. The Sky Fraud Forum, where criminals discussed carding techniques and money laundering methods, was also closed down. The Russian government even left a message on the platform, asking, "Which of you is next?" The fourth website taken down by law enforcement agencies was the UAS Store, a popular seller of stolen Remote Desktop Protocol (RDP) credentials. It accounted for $3 million in digital asset proceeds, $862,000 of which came from the ongoing COVID-19 pandemic. UniCC and LuxSox were shut down by the authorities less than a month ago. During their existence, the carding websites generated a total of $372 million in cryptocurrency. What is the total amount of cryptocurrency owned by Russians? Russia's lawmakers, who have been hesitant to take a position on cryptocurrency, recently announced that they will impose regulations rather than outright ban it. This is welcome news for the growing number of local investors. Some estimates place the total value of Russian digital assets at around $214 billion. This sum accounts for nearly 12% of the total market value. However, Russia's finance minister, Anton Siluanov, believed that this figure was exaggerated. He estimated that local investors own $26 billion in cryptocurrency. The Samsung Galaxy S22 includes a cryptocurrency wallet. On Wednesday, Samsung unveiled the Galaxy S22 series, confirming everything we thought we knew about the phones. As Samsung discontinued the Galaxy Note brand, the Galaxy S22 Extremely has become the brand new notice. In other words, if you kept up with the leaks that preceded the Unpacked press conference, the Galaxy S22 event didn't have any big surprises to reveal. However, Samsung did deliver one surprise that may appeal to a specific type of Galaxy S22 purchaser: cryptocurrency enthusiasts. The Galaxy S22 phones come with a brand new Samsung Pockets app pre-installed, which does everything you'd anticipate from a smartphone's digital pockets. However, unlike the iPhone's Pockets app, Samsung Pockets will support crypto transactions involving Bitcoin and other digital tokens. Samsung's interest in bringing cryptocurrency support to its smartphones did not begin with the Galaxy S22. It's a feature that is already available on Galaxy devices. It all started a few years ago with the Galaxy S10's Samsung blockchain pockets. Samsung added hardware wallet support to its blockchain pockets in May of last year. That was right around the time Bitcoin reached a new all-time high during the crypto frenzy of spring 2021. Individually, Apple confirmed that it has been paying attention to the cryptocurrency landscape. However, Apple has yet to decide whether to add Bitcoin support to its iOS Pockets app. On the same note, Google has expanded the Google Pay ecosystem to support cryptocurrencies. However, Google has not provided the kind of assistance that Samsung Pockets may have on the Galaxy S22 handsets. How does cryptocurrency work on the Galaxy S22? Samsung hasn't fully defined what the new Samsung Pockets can do on the Galaxy S22 in terms of cryptocurrency transactions. What is certain to date is that Samsung unveiled a brand new Pockets at the Unpacked event earlier this week. Here's how Samsung framed it all in less than 30 seconds during the wallet segment of the presentation. Our all-new Samsung Pockets will keep your digital valuables in a single, convenient, and secure location. You can store your IDs, bank cards, passwords, keys, and even boarding passes. So you'll not only have to carry much less, but you'll also be able to access them from anywhere. Samsung Pockets may also make it easier to access and discover complex digital goods, such as cryptocurrency. If any of this sounds familiar, it's because we already have this performance on the iPhone. Many of the digital assets listed by Samsung are handled by Apple's Pockets app. This includes bank cards, boarding passes, transit cards, tickets, rewards/loyalty cards, digital keys, automobile, house, resort, or workplace, vaccination data, and digital IDs, the place obtainable. The iPhone Pockets does not save passwords, but iOS does have a separate password manager called Keychain. Apple Pockets does not sell cryptocurrency. That's where the Galaxy S22 Samsung Pockets app shines. It's the kind of growth that Bitcoin and cryptocurrency enthusiasts will appreciate. Using the Samsung Pockets on the Galaxy S22 to conduct crypto transactions could be a useful addition to the phone. Nonetheless, we don't know how it works or which cryptocurrencies the Samsung Pockets will support. What do we all know so far? The press release for Samsung's Galaxy S22 makes no mention of cryptocurrency assistance. The term cryptocurrency does not appear as frequently as it used to. However, it does state that the Samsung Knox security suite can protect your blockchain keys. Whether it's the Samsung Blockchain Pockets or the brand new Samsung Pockets on the Galaxy S22, Samsung is concerned about consumer privacy and security. These points were covered in the Galaxy S22 Unpacked section that followed the Pockets announcement. The Samsung Knox platform will protect the contents of the Samsung Pockets. Knox has its own personal safe processor and memory, which isolate all sensitive data from the phone's operating system. Additionally, you will be required to use your fingerprint or a PIN to authorize any access to sensitive information within the safe enclave. Keeping this in mind, the cryptocurrency administration on the Galaxy S22 should be fairly secure. What we'd like now is for Samsung to specify which cryptocurrency options the Galaxy S22 will support, and to expand Samsung Pockets to other Android devices, not just the flagships. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.